Hi everyone. So in this video we are going to do chapter 15 quiz, and this is from the ACCA study hub for financial accounting paper. So previously we have done up to chapter 14. In this video we will do up to chapter 15. Okay. The first question is manufacturing company depreciation policy for the plant and machinery in its factory is straight line over 5 years to reflect the way the assets are used. So how would this depreciation charge be classified in the statement of profit or loss and other comprehensive income? So as this company is manufacturing one and decide to record reflect decide to reflect the way the assets are used. Okay, so that means the depreciation policy for the plant and machinery will be reflected based on those asset is used. So as asset is used for the manufacturing purpose, so in that case this depreciation should be recorded in the cost of sales part, because in the cost of sales these are the expense related to the manufacturing of that goods, or related to the goods that we are selling out. So that's why we will include in the cost of sales. But if they have not mentioned this point regarding the manufacturing and the policy to reflect this expense the way assets are used, in that case we will go for administrative expense. But look for the clue in the question for this kind of question. Okay, but regarding the, we are very pretty much sure that in finance cost we only record interest expense, so this could be not be our answer, right? Next, we have which one of the following represent cost of goods sold in the statement of profit or loss. So, cost of goods sold formula is your opening inventory plus purchase minus closing inventory. So, out of these four options, there is only one option where closing inventory is deducted. So, opening inventory plus purchase minus closing inventory. Now, third, in which one of the following circumstances can fair presentation in accordance to the IFRS be presumed? Okay, so our first one is, just a second. Okay, the first one says the financial statement comply with the IFRS. So complying with the IFRS alone is not sufficient unless it requires all the disclosure as well as correct application of the standard, right? So that's why it's incorrect. B is IFRS has been appropriately applied with the additional disclosure where necessary. Yes. So this is what's said by our standard IAS 1. So fair presentation is presumed when our standard are properly applied, as well as all disclosure or any additional disclosure is provided for regarding for the clarity or completeness. So this is all about the fair presentation. So B is correct. Now T. IFRS has been applied in so far that it does not conflict with the local gap. So IFRS should be it must be fully applied, not partially or not conditionally with the local gap. Mixing with the local gap will violate the full compliance. Okay, so that's why it's incorrect. Now D. The financial statement provide relevant, reliable, comparable, and understandable information. So this is they are talking about the qualitative characteristics, right? Not the they do not guarantee regarding our fair value and fair presentation. So these are the qualitative characteristics, but they do not guarantee fair presentation under the IFRS unless full compliance is met and additional disclosure is provided. Okay. Now, fourth, the management of GG intends to liquidate the company in the last quarter of 20X7. So, on what basis should the financial statement for the year in 30 June 20X be prepared? So, first one is going concern with no specific disclosure of material uncertainties. So, as management is very clear, they want to liquidate the company, so there is material uncertainty exists, right? So that's why disclosure of the same is required. Not disclosing will mislead the user of the financial statement or the shareholder. So A is incorrect. Now B, going concern with a specific disclosure of material uncertainty. Disclosure of uncertainty is only required when going concern assumption is valid. But here management are very clear that they want to liquidate the company. So even you disclose, you must not use the assumption that company is going to be prepare the financial statement on the going concern assumption. Why? Because in the going concern assumption, we assume that company will operate in the foreseeable future for at least 12 months. But the company is going to be liquidated soon, right? So we just can't use the going concern assumption here. Okay. Now third, on the basis of the other on a basis other than going concern with the disclosure of the fact. So again, it is very correct to not use going concern, but it does not mention that you must also disclose the reason why you are going to liquidate the company. So IFRS, according to IFRS, required both the changes in the basis as along with the reason to be disclosed. So, and which is said by the option D, right? So meeting all your IFRS requirement, like not using the going concern basis, using the other basis means like breakup basis, breakup value basis. So disclosing that going concern are no longer valid in our situation, along with explaining the reason is the best way. Okay. Now the last, Bara sold 10 items of merchandise with a list price of 100 each to the customer on a normal credit terms of 30 days, interest free. Bara offered 20% trade discount on all such sales. 2 weeks after the sale, customer paid Bara 750, which Bara accepted in the full and the final settlement of the amount due. 40 of the amount received is in respect of sales tax credit by the Bara on the behalf of tax authority. What amount of revenue should be included in the Bara statement of profit or loss for this item? So basically, in this case, in the sales tax or VAT case, we used to show net amount figure in our P&L. So net amount figure will be 750 minus 40, which is 710. Yes, we are done with chapter 15 as well. So let's meet in the next video for chapter 16.